So you've started investing and have realized that ETFs are probably the way to go. However, you are confused because Vanguard offers so many different types of ETFs. The decisions just become more and more difficult. So in this video, I'm going to go through the Vanguard Germany All Cap ETF and explain what kind of companies this ETF encompasses, what sort of sectors these companies are based on, and whether or not it might be a good option to invest in for the long term. So as usual, I'm going to be using InvestEngine, and if you want to sign up to that, use the link in the description down below. So this is the InvestEngine app and this is the search menu. What I want to search for is the Germany stock market, so I can just press Germany, and as you can see there are three options. However, I do not want to go for bond ETFs. Instead, I want to go for this only option, which is the Vanguard Germany All Cap. The ticker code for this ETF is VGER, and although I'm showing it on InvestEngine, this ETF can be found on many other investment platforms, especially it can be found from Vanguard. However, the benefit of investing it from InvestEngine is that the fees work out cheaper than even if you bought it directly from Vanguard. So what we first want to look at is the price movement over the past few years. So since 2020, we can see the price movement, and during the bull run of 2020/2021, we can see that it reached a maximum of £24.89, and currently it is worth £22.41. We can also see that during the bear rally, it did drop all the way down to around £17.09, which would have been an absolute bargain at the time. So this ETF encompasses basically the top companies of the German economy, and like I said, it would have been an absolute bargain to have bought it around £17.09. This is because there was a huge amount of uncertainty, especially in Germany, because of the Ukraine conflict. Germany relied heavily on the gas supplied by Russia, which, because Germany said no to the conflicts, Russia then replied to that with blocking off the Nord Stream, which supplied a lot of gas, and also the plans to build the Nord 2 stream were cut off, meaning that there was a huge amount of uncertainty if Germany could actually even go through the winter because its gas reserves were running on low. Luckily, the worst didn't happen, and Europeans, including the UK, we got our oil and gas from other places such as Norway, so that actually worked out to be really good. And we can see just before we went into fall winter, it was at its lowest, and then throughout the winter we realized that we'll be okay, and of course now coming up to summer, the price of the ETF is recovering. But that is a very simplistic overview of the economic situation, but it's worthwhile to see more of the fund details in order to give you a better informed decision if you want to invest into this ETF. As always, never financial advice, it is up to you as an individual investor. So the most important things are put into here, and I wish that InvestEngine would put the dividend yield here too, but essentially this is a distributing fund, meaning that dividends are paid out in cash, and I believe the VGER, also known as the German DAX in other stockbrokers, does pay out quarterly. So the total expense ratio is 0.1%, so it is definitely more expensive than the S&P 500, for example, but I think it is a very different type of ETF, and essentially if you want to own the world, you can choose the all world ETF, or you can choose a select amount of ETFs that don't overlap with each other. I think if you're buying the S&P 500 and you want to diversify further within your ETFs, you can look into something like the Germany All Cap or maybe the FTSE Japan or something like that, because most of these companies will not overlap. However, that still being said, the two economies, namely being Europe and America, are quite closely related and correlated. Most of the time when the US stock market will go down, we can also see the European stock markets go down too. So in terms of details, the ETF does track the FTSE Germany All Cap Index, which tracks the large, mid-size and small-size companies from Germany. So it's not just like the FTSE 100 or the FTSE 250, where each company is separated by the market cap. This is basically just all the good companies in Germany put into an ETF. What I would say is that Vanguard doesn't really provide a lot of ETFs for Germany, so if you do want to get into investing into a specific part of Europe, this could potentially be a good choice. So in order to check the dividend yield, you're probably going to have to go into the fact sheet, which InvestEngine does make it easy to do that. So the VGER does currently pay 3.2% in dividends, which is a lot higher than the S&P 500, and typically speaking, European countries do focus a bit more on dividend than growth. We see that with our very own ETFs, the FTSE 100 and the 250, they pay a dividend yield of around £4. So if dividends is something that really motivates you, investing more in Europe can lead to more dividend income. That being said, when companies do pay lots on dividends, they can often restrict the amount of growth they do, so take that as a catch-22. So let's go into the kind of companies this ETF invests in and see what kind of exposure it provides for you. So this ETF has 150 holdings, so 150 companies that it invests in, and this is sorted by market capitalization. We can see that SAP is by far the biggest holding at 9.4% weighting. So SAP is a software company based in Germany, and as you can see over the past few years, it has been doing really well. The next company is Siemens at 8.1%, and you might have heard of Siemens before. They make the technology behind a lot of scientific equipment. They also used to dabble a lot in consumer technology, for example, televisions. However, these days they focus more on industrial applications and scientific equipment. Allianz is the next big company, and that is a financial company based in Germany. The next is Deutsche Telekom, and that is basically T-Mobile, and they are a telecommunications provider. We have Bayer, which is a pharmaceutical biotechnology company. We have Mercedes-Benz, which needs no explanation. They make some of the most luxurious vehicles in the world, basically. The next is BASF, and if you didn't know, I actually have a PhD, and we have collaborated with BASF in the past. They are basically a big pharmaceutical / chemical provider, and they are massive in Germany. Then we have companies like Munich Re, which is an insurance company. We also have Infineon, which is a semiconductor company, Deutsche Post, Volkswagen, BMW, Merck, which as a scientist we order a lot of stuff from Sigma Merck, which is basically chemicals, Adidas, Deutsche Bank, E.ON. Many of these companies you would have heard as a UK resident, for example, E.ON Energy. We even have companies like Zalando, which you can order shoes from, Puma, Carl Zeiss, which makes optics for even what you're looking at right now. I'm using a Sony camera. We have Lufthansa, which is airline company, and we have HelloFresh, which is a company I kind of worked for one day. We have Hugo Boss. For most of you who are very fashionable would happen to know about that company. We have many other companies such as Sixt, which do rentals, TeamViewer, and the list does go on. But if you do want to go through the companies yourself, you can download InvestEngine and just go through them manually. We can also check what regions this ETF overlooks. So for example, almost exclusively German based. Just because something is German based doesn't mean that it does all of its operations in Germany. For example, we saw HelloFresh, Zalando, BMW, Mercedes, they do business all over the world. So in that regard, just picking even one ETF that Vanguard offers does give you exposure to almost all of the world, although it will be more concentrated in Germany, meaning that if something bad does happen to the economy, you'll see more of a hit in your specified ETF. So no surprise, Europe excluding the UK, it is 99.6%. So in terms of sectors, some of these may overlap, so some of these companies may be both industrial and technology. So for example, sectors, we have industrial about 40%, technology about 17%, financial about 7%, healthcare around 6.3%, and then about a quarter of it falls under something in between. So if you did want to find out what companies are put under what sector, you can actually just do this manually. For example, if we do go into industrial, we can see that some companies fall under industrial, but I wouldn't personally put them just under industrial. For example, Mercedes-Benz aren't just industrial. In my opinion, they do a lot of business to consumers. For example, buying a Mercedes A-Class, that is technically consumer. And then we have things like Adidas, which is really big, but I wouldn't put Adidas under industrial. But to be fair, there is definitely overlap between different sectors. But again, you can download the app, and for yourself you can actually go through each ETF. You don't actually have to put any money. You can sign up for this app absolutely for free. Then if you decide you want to put in money into the app, you can start with as little as £1. Honestly, no pressure. None of my videos will ever tell you to sign up to any specific app. 100% up to you. So lastly, I'm going to go through the key investor information pack and see what kind of notable things that you do need to know about this ETF. So I know a lot of you will never read this, and in reality this is very boring, only for people like me who have nothing better to do. However, in this video I'm going to just summarize the key stuff that you do need to know about this fund. So the first thing is that this fund is passive. We know this because the total expense ratio is also quite low. So there's not too much small print for this fund. So basically this fund just tracks the performance of the index by investing in all the securities. So all the securities of the 150 companies in the Germany all cap in the exact same way as the Germany all cap or the DAX would have done. So the original index. Also the index is committed to keep up with the index unless there's something that goes wrong that is beyond their control. The fund may use derivatives in order to reduce the risk. The base currency of this fund is in euros and then it gets converted into pounds. So there will be some tracking error between the original Germany all cap and the Vanguard one. The fund may also invest in short-term secured lending. This is not something I would worry about too much. And in terms of risk and reward, it is generally towards the higher end. And most of these Vanguard funds, including the S&P 500, usually are a 6. This just basically means in the short term there is quite a lot of volatility, as with most indices. This is nothing to worry about as a long-term investor. So make sure to check out some of my other videos and I will see you in the next video.